let me see. I need to make some playlists. I need to hire my kids. That's what I need to do. And where's my water? Let's see if we're live. All right, sweet. We are live. Let's see here. Oh no, we're on the wrong one. If anyone's here right now, give me just a second. Got people showing up. Right on. Your wife's boyfriend, Brad, Matt, Benny Mac, William, Juice 389, Brad, Curtis, Rob, Benjamin, Binky, John, Troy, Alderway, Ben, Matthew, Mahesh, Chaz. Good to see all of you. So you guys saw the post on Twitter then too. Happy holidays to anybody that's celebrating a holiday today. Okay. Hello, Frotron, or Frotron. Omar, how are you? X, Garrett, Endless, Jasmine, Joe, Bobcat, Missy. Good to see everybody. Hope everybody's doing well. Let me change my brightness level here. Okay. Hey, Guac, the King Cow, good to see you. Hope everybody's doing well this evening. Before we get into, we'll let people pile in here. Mind-numbing day today. Yeah, so we'll talk about that. It's not all bad right now, but there are some forces in the market. You know, we had OPEX this past week. The month actually wraps up and the quarter still continues to wrap up as we head into the 31st. And we're all really positioning for January through March. Some of us just have more weight than others, right? We missed your soothing voice during the mayhem today. Yeah, you know, I got cut. So I had a couple issues. I had my children were away at their grandmother's house. They came back home this afternoon. I didn't really have too much of an option. It's weird too because I put on a long SPY call this morning and then I bought at end of day a hedge as well. So invariably I'm in a straddle type situation myself right now. What's surprising about this straddle that I'm in, they have different dates, and I believe both sides will print in some fashion. Both will be green at some point. NVIDIA evening crew looks strong, holding NVIDIA weeklies. Love all of you guys out there. I wish I could have been here for you at part of the day, at least today. You have me back tomorrow, full time. Things have settled down around here slightly, I hope. As you know, it is the holidays. Things are crazy. We've got kids out of school, got family and friends coming around. So there are parts of the day where I can't be here 100% of the time. Yes, sir. Family first. Yeah, and it's weird because my youngest daughter, I hadn't seen her in a few days, and we ended up cuddling later in the afternoon today. And all she wanted to do is play some Roblox and sign up for the. I gave her first Roblox money. She's never had Roblox money, and she doesn't know how to upload the card and all that kind of stuff. Yeah, excuse my coughing too. I've been talking a lot. I'm not sick or anything, but I've got a sore throat from speaking so much in the mornings. So I've had to get some. I got the old school Ludens that you remember when you're a kid and your school wouldn't allow you to have cough drops if they were Ludens. I don't know if anybody remembers Ludens. They were basically candy that you could pretend you could eat candy in school when you weren't allowed to. Yeah, I did want to mention that before we get started too. I was so impressed today looking at the chats and people helping each other out. It really made my day seeing that. I wanted to talk briefly about Discord on that topic as well. What we can do is you can stay connected in your regular, if you only have one screen or two screens out there, if any of you are trading on like laptops, desktops, that kind of stuff, where Discord, because I'm in a few Discords. Now like let's say I spend majority of my time on Twitter for my social media interaction. But when I have a Discord that I have unmuted, even if the screener is not up, I'll get little pop-up boxes that keep me abreast of whatever the conversation is on that Discord channel that I'm trying to pay attention to. And I know Discords can become there's too much clutter, or there's too many speakers, or people can be really mean in Discord sometimes. There can sometimes be a groupthink that goes on in Discord that it can be positive or it can be negative. But sometimes they're really good. The best Discords that I've seen, usually there are very few channels, one, two, or three. There's usually a dedicated group of people that are actively trading, either futures or cash markets. If you have that dedicated group that are actually trading the market day in, day out, those tend to be some very productive channels. But you need to have the bears and the bulls get along, and be traders, be investors, and be there to make money, or at least tacitly get along. And then usually a third channel for investors, where the investors talk. Now, if you guys want something like that, I can buy Taste or TradyTix has some mods where you can look for trade setups as well. And that actually is a pretty good program that TradyTix offers. So it would give you some tools to use within a Discord. Yeah, it wouldn't be open to the public. The Discord community would be something rigid and more structured. So we would have to structure it for sure. And you really want, and to be honest with you, you really want active traders controlling the discussion that consistently make money and feel confident and comfortable discussing and working with other traders to produce actionable trades. And I think sometimes when you create a Discord, you'll find volunteers that will help with that discussion, that know what they're doing. I know there's a few traders in our community that know what they're doing, that actively trade. They could lead or at least not be muted. You could even have some unmuted channels for just like a general discussion, like a shit posting handle, let's say, where it's a free for all. And then you have like a pro discussion where there's just a small group, 5 or 10 people, and the rest of you would just ask questions. I don't understand this. Can you explain that to me? But when they're actively trading, they would be in charge. They would have the power maybe to mute other people, or maybe some sort of a hierarchy where you make 5 or 10 trusted traders, and if they find people in the general discussion that seem to be making money, you could request, hey, can you let me into the discussion? Can you check my post history in the open discussion? There's something we can do. There are actually some great traders. Whether you guys know it or not, within the people that follow our community, there are some great traders that make a lot of money. They do very well. You'd be surprised. I'm not going to name names here, but I know I review every person that requests access to the handle, and there are some great traders. If they make themselves known on Twitter, if any of you out there that are listening right now, and if you're not listening, if you listen later and watch this stream later, if you guys want to reach out in a DM and you want to actively work within a Discord, it would be a free Discord sub, but it would be invite only to whoever's subscribed to the handle. And then of course you'd come in and you'd be muted on the trading channels for ES or for Globex and for Cash, but there'd be a general discussion that you can introduce yourself, talk about your trades and your setups and your investments. And then if you're like, hey, look, I'm posting these trades that are working, can I get involved in that sub? They would review your content and let you in. And if you felt as though you're being slighted in that way, you could always contact me and we can find out if they just don't like you. Because, we have to put personalities aside to some extent. And we really do want to be focusing on people that are actively trading and are they making money or not. You want to be following those people. Consistent. Yeah, so let me keep chewing on it. I need another day or two to figure it out in my head how it would work. But you'd need to have some people step up. If you had maybe a core group of 3 to 5 or Globex traders, you get a core group of cash market traders, maybe a core group of investors. There's a guy named Tesla Wolf that's on Twitter, and he's a long time stock investor. Like some guy like that in an investor channel, he could craft and curate some form of an investment. You know who else does a great job with that is at Quinn Invests. Does an amazing job with curating an investment profile. So if we find a few people like that that would like to work together, and then what you do is you let everyone else into the room from the handle. You get allowed into the general discussion where we have our own policing guidelines, right? Everybody's chatting. You get to read the pro traders, I guess. They're not really pro traders, but that you get to see the active day traders trading. And then if you're posting and discussing your ideas in the general channel, you would then at some point say, hey, look, I'm posting and I'm interacting with the community. Do you mind if I join you active day trading or active Globex trading, whatever. And I could put the TradeTix has some tools that I can buy that would give you maybe one more room that you could look for setups. If you wanted to backtest ideas, or let's say you're like, we're all going to play, I don't know, you pick it, Pins, Home Depot, and you guys want to research some stuff within the Discord. And then whenever I'm live streaming, I could put a live feed in there every day so that you have an actual live feed. You could discuss trades, and I could put it in the general discussion, and then you guys could just actively discuss it as an entire group. You don't have to worry about the public seeing your discussion. You have to worry about, how you're viewed publicly and that kind of stuff. I can teach what not to do. Inverse my trades. Yeah, no, in the Globex, you'd have that Globex discussion where it would involve the RUT or RTY. It would involve NQ, ES. You just have an equities channel. Or not equities, a Globex channel. That includes futures. That includes the MES, the ES, anything that has to do with the Globex market. The Globex market is equals pajama traders, equals overnight traders, anything you want to call that. That's that whole group. Yeah, so what we need to talk about, so we're going to start this off right now. and we're going to start the night off. This is the daily brief. I'm going to start this right now. We've got enough people here. We've got 74 people here. We had a brief discussion about a Discord channel. I'm going to try to get that up and running for you here within the next week. And it'll be a structured thing. There are some really good Discords out there, and there are some really, really bad Discords out there. So we have to be careful on how we launch something like that. Now, happy Boxing Day to any of you out there. If anybody's watching this program at any point and you're from another country and you're celebrating a holiday, happy holidays. Hope you're happy, safe, that you're with family, friends, or if you prefer to be alone, that you're in a happy space as well. We are at the end of year still. We are still in an OPEC cycle. So everything I'm going to talk to you about tonight are knowns, okay? These aren't things that are open to discussion. I'm going to give you some black and white things. These are concrete things that you can rely upon as we're heading into the end of the year. And we are still in OPECs. We have much larger players out there that have to make very large moves for January through March that will impact the market, okay? And we will see some weird movements, swings, why do things not go up, that kind of stuff as we move forward. There is some real risk in this market right now between now and the beginning of next week. There is a chance, I would say the chance of volatility and weakness in the market is almost a sure thing. It's anywhere from a 70 to a 90% chance that there will be volatile moments in this market. So if I say to you, just for no matter where we were right now on the charts, I would tell you, expect volatility. And so if we're at a high, and I say to you, so I said to you on Friday, and then I said to you on Monday, and then I said to you on Tuesday, even while we were clawing our way back at the end of the day, I said to you, put a hedge on. So I was asking before, and now I'm telling. Okay, so I have a hedge on. If you don't have a hedge on, and you hear this becomes repetitive, right? Where I say to you, if you don't have a hedge on, don't come back to me and say you're losing your money. I've explained how to put the hedge on at this point. You can buy single day hedge protection that's a few pennies or 20 cents, let's say. It's within 5 or 50 points depending on how you count the stock market. So if we're at 478, you'd buy 474 Ps a day or two out. I've talked to you about banks that will be putting hedging on throughout the week. We've seen weakness with different hedging strategies coming into the market. We've seen positiveness with long hedging. We've seen some negative movements in the market with long and short side hedging, and that will increase as we get closer to the 3rd and the 31st. We're going to talk about the JPM collar here in a minute, but I want to express to you that regardless of where we are in the market, that stuff's going to still happen even if we go up. Now, on the side of, let's look at ES real quick, right? You see this move here on ES, and even if you're in the most bullish context ever, even if we're in the Christmas rally, that only seems to go up. And I hear someone today say, well, my position is burning up here. You cannot be taking longs with a move, this 5-day monster move, and not expect some risk to sideways consolidative movement. We had the look above, right? We got our nice look above today, and that we're going to get some consolidation. And when we get some consolidation for this move higher to this 4,800, we're looking for certain things. If we're not seeing them, then we're going to continue to sideways movement and possibly slightly down. Now, we're going to take you somewhere else. I want to talk to you about this. You see how giant this move here is here. I talked in Sunday's video about the real risk for us to trade violently deep into a new correction down here. And where does that, why are we open to that? Because when when big banks, like the biggest 5 to 8 banks, re-hedge this market. Let's say we're expecting them to hedge on the downside to 460 or 450. It's not so bad. But let's just say JPM hedged down to 435. And we saw some of that early hedging on Monday. We saw someone hedged the SPY to 435. We had some panic in some small hedge fund. So what if we don't expect that? We have to at least be aware that that could happen. That can make the market very volatile. The other thing that can make the market very volatile when we're in here is all of the hedging that's coming off the market as we head into the third. This is the negative hedging that we had way back here. So we've got some events that are taking place that will lend some volatility, even if they're brief, during this time period. So the logic would be, hey, we've come this far here, right? This is already working against us as bulls. We know that there are some market events that are going to take place that are going to be negative down here. And then we also know that in these collar strategies that they have some buy side stuff to do. So even on the buy side, let's say we talked about this weekend, I talked to you about the billions of dollars in hedging, right? It's billions. You're going to see billions come in. And when you see those billions come in, if they're on the buy side, we're going to see some upward movement as well. So maybe straddles are your friend here, where you're buying the long side and you just have to wait or time it correctly, right? Or you're buying a spread. We talked about spreads being your friend in this environment. You can buy a call spread from now into Friday or into January, so that you have to deal with the up and down movements of the market, right? For the expiry, you could do a Friday expiry on a call spread that's up here at 480. And you could take some short dated puts for 6 cents every day along the way. So if you don't get your tag up here, well, I wouldn't say do the 480, but I would say do an in the money call spread, expires on Friday, and then you are hedging with 6-cent puts every day as we move through to Friday or even Monday or whatever. But when we're up here, if you can only be long up here or only be short up here, if you're like, I'm only a bull or I'm only a bear, that's all that works for me. It doesn't really work as a trader or an investor. It might possibly be better for you to sit this one out into the new year. So we've already got this here. We've got this huge move. You can't get that greedy on a move this high. I got to express this to you, okay? And then I want to talk to you briefly about not specifically Home Depot, but when we hit tops, I want to show you guys something that happens when you're hitting tops, okay? Maybe this might not be the best one to be looking at. Let me bring up some chart I haven't charted. I don't think I do SPX anymore. But I want to show you, what I want to show you is when you're, well, hold on, let me go. Let's just say that we hit this resistance. This here is resistance. This white line is resistance, okay? Doesn't matter where it is, it's resistance. This is on any ETF, any chart, doesn't matter. You come up and you meet major resistance, okay? I want to show you, let's say it's right here. We come up, we hit major resistance. On a chart, okay? When we come up to this resistance point, this major resistance, inevitably a call wall, we're going to come up to it, and we're only going to have certain reactions. We're either going to immediately ricochet off. That shows you that it's being rejected, right? This is pretty clear that we rejected this major resistance. We also know that if we hit resistance and we break through, that was a false wall, right? That was a weak resistance point. We know that there must have been more calls above that we didn't know about, or heavy calls came in farther outside the money, and we broke through, right? So that was not a real resistance. It was just a minor resistance. Now, if we come up to this call wall up here, right? We know that we don't have a ton of calls above 47.49. We see equity flow supply side on the buy side coming in and light call buying above. Let's say it's at 4,800 or 4,900. There'll be time for consolidation in here. And that's what's taking place right now. We're consolidating. And there's a few points in this consolidation that you need to understand is that, number one, it's giving the time for the market to find its direction here. That means the market doesn't know where it wants to go. It means that the market makers and the traders in it, the investors in it, are waiting for some news for the market to decide. And that means we're waiting on who? The banks to decide where they're going to sell calls, right? Are they going to sell calls at 500 above here? 525, 550? Are they going to buy a bunch of outside the money calls up here as we head into the first of the year or the third of the year, right? So the market's waiting to find out what these moves are going to be made above and these moves are going to be made below. And so us as retail traders, we're not making that decision. We don't drive the market, the banks do. So we're waiting on that to happen. Now, what happens in that time frame? We can trade the supports in the minor support intraday and resistance levels in here while we wait. We know that if we wait long enough, that this sideways movement will have a tendency to trade down and then squeeze above again. Then sideways, trade down, and then squeeze above again. Now, the time frame in this is not as important as the levels. So you guys can easily look on the charts that I show you tonight and find the support and resistance levels. You can day trade this stuff intraday if you want. If you put spreads on and your core belief is, hey, we're going to 4,800, then a spread would do you better with some time on its hands, right? And we also know that during this time period right now, that there could be moments of weakness. There could be moments in here if you were playing, let's say, believe it or not, a Tesla or a sensitive stock like a GME or a PayPal or a PINS. You could also end up seeing in here this week severe drawdowns. You might see the market be heading up, but your stock is going to have a moment where it falls or collapses. And so that was my points behind you should be hedging during this period. When we come up here, even if we're going up, you might have these momentary drawdowns. So if you're a bull, maybe you're just cash gang right now and you're waiting, hoping that you'll find these brief moments of weakness. I also talk, and this is specifically related to January. The real trade right now, if you're a bull, is to be cash and waiting for these moments of weakness. Hold on a second here. As a bull, you're really looking for these momentary, just be patient, sit on your hands, and wait for these moments, because you do realize, right? I want you to realize that if I'm a bank and I want to, let's say, long IWM, or I want to long something that's been heavily shorted, I'm going to attempt to, let's say I'm like, you know what we're gonna do? We're gonna pump PayPal up in January. It's been shorted down, or Snap is a great example. We're gonna remove our shorts off Snap. We're gonna take Snap long, but I really want better positioning than where everyone else is positioned in Snap right now. I already hold a ton of Snap equities. I'm shorting the shit out of Snap right now. So what I'm going to do is I'm going to come into Snap in the early morning. I'm going to send my guys. I'm going to send my boiler room guys down there to the basement on the 3rd. And what they're going to do is they're going to heavily sell out of Snap at 4 o'clock in the morning, 3 o'clock, 4 o'clock in the morning. And we're going to dump Snap at 4 a.m. We're going to just bury it. And the price of Snap's going to plummet. And I'm going to sell out of my position of Snap while I'm still inside my shorts. I'm going to short the hell out of it down until the 9:30 hour. right? All the internet's gonna be like a bunch of chickens in a hen house with the wolves outside. You're gonna capitulate, sell your positions, and snap. And then what am I gonna do? I'm gonna close my shorts. I'm gonna buy back all my shares as a bank, right? And then I'm gonna load up. And how do you perceive that as a trader and investor? You see huge capitulation in early morning hours. You see this giant red bar, dildo bar of snap burning, and you think we're all screwed, the world's gonna end. And then out of nowhere, you see this boom, green bar down below. And that right there is a bank buying into Snap for a long. It could be any stock. If they do that operation on, let's say, Monday or Tuesday of next week or some day this week, you have to be watching for that in the stock market. Because then what happens is they'll start accumulating, then other banks will start accumulating, then small family offices, small hedge funds will start accumulating. And before you know it, you'll start seeing it being talked about on CNBC, and it's too late at that point. It's too late. You can see it in the Home Depot right now. You can see it in the Home Depot trade. You can see it right now in the Home Depot trade. It's going on. So I want you to be aware of that as we move forward in the stock market. I want you to see that when we come to real resistance, you're expecting three reactions. You're expecting one of three reactions, right? You're expecting ricochet off. That's bearish, right? You're expecting a breakthrough. That's bullish. That's super bullish. That means nobody knows what the fuck they're doing. And then you're waiting for this other one. This is where we bounce off, consolidate, and we're waiting for the market to pick a direction. They'll sometimes look above and peek above and see if we're heading higher. If the market says, nope, we're not ready yet, they're going to check below. And if the market says, nope, we're not ready yet, we're going to come back up, consolidate until we find a way. Let's say we peak below. You can't get bearish unless we peak below and the market says, yep, we're not going any higher here. We don't know what's going on. I've got some news that nobody else knows, so we're going to start selling this down. That's when you start to get bearish down here. Okay? Does that all make sense so far? Everybody understanding that? So I want you guys to understand how this happens when we come to resistance. This works the same on inverses. This works the same if you're a bear on the inverse. When you're coming into major supports, you're looking for these things to happen. We had an event I believe on the 10th, where we were in a low liquidity environment and we broke through known support. This same thing happens all the time in single tickers. This is what I was afraid of from Monday into Tuesday on SPY or ES or SPY. We could look at SPY over here. My fear right here on Monday was that we would go up in after hours in the overnight Globex session when liquidity was low, and we'd sell and burn the market down with at least down to maybe like 460. So that's why I put that hedge on. I was afraid of the manipulation that can take place within these hours here. We were too close for my taste into what would happen into Monday. Okay? And we're up in after hours. We went up in after hours, and we went up into Globex this evening, right? In the overnight hours. So what we could wind up seeing in SPY is, let's say we end up checking this every day. So let's say we open this tomorrow and we're up here, right? Then we bounce back down in here. We do this jobby, right? We just start bouncing around. So how do you trade that? The way that you trade that, if you want to continue to trade the SPY, feel like I want to trade this SPY, is you're looking for supports, right? You're looking for supports at 475.66. You're looking for supports at 474. You know that if we break below 4,700, somewhere in here, it's between this probably needs to be raised because it's moving up, believe it or not. When I say this is your buy the fucking dip moment down here, that this is it right here. Like this is, you could trade just this. You could just say, and it might not ever come down here, but if you said, I'm going to sell 4780 and I'm going to buy 4700 or 47.1, your own risk appetite down here, you could successfully trade this no problem. Okay? So you're selling the tops, buying the bottoms, and you're looking for weakness in forms of unknown news. You're looking for weakness in forms of hedging being placed in the market. And as we get closer to the 31st, you know that the likelihood of us having some weakness and some rips are high. You know, as we get closer to Friday, that we're more than likely going to have a rip higher. We'll probably at some point before Friday hit 48.25 on ES. It could take until Monday, but probably will happen before Friday. We think that JPM has to do a buy side in this market. We've talked about us hitting 4,800 by Friday, and then I've also talked to you in past videos to expect some sort of move or volatility and weakness in the market, probably sometime on Friday into Monday morning. Let's look at it from this perspective. Let's look at it from the perspective of. Let's say we do this here, right? Let's talk about how do you get shaken out of this market, right? You trade up, you trade down. Let's say you trade up here, you trade down, you trade up here. And let's say you have one day where you trade down. This is the 31st, right? That's the 30th. Let's say we trade way higher to the 30th. It's like 12 o'clock in the afternoon. You're all pumped. We're at 48.25. Everything is great. You can close out your spreads. But then let's say we trade down to this on the 3rd. Right? So it all comes down to timing. When if you were a bull, you could have just waited till we were down here at this 4,600 mark. If you're a bear, you might get trapped down here. You might think this is the great doom, and yet it just opens us up to a larger move in January. You see that? You see how you're buying bottoms, you're selling tops, and you're looking for that one ripper to the top. If you can't time this stuff, then what you're doing is trying to buy a spread down here somewhere, and hopefully you're able to close it out on Friday or Monday. And then if you're really looking to take longs in that ER trade, there's more than likely going to be an opportunity at some point, 31st, the 1st, the 3rd, somewhere down in here. Okay? And what's my next point on me throwing that straddle on? More than likely I'm going to catch that straddle long here before Wednesday. Let's say I'm long, and well, right now I'm long into the 29th, into tomorrow. So I'm going to take a risk that we're going up to 4,800 tomorrow. If those burn, I'll take them again for the 31st expiry, dirt cheap. And right now I've got a hedge on expiring on the 3rd, because I still, in my belief, think we're heading down between now and the 3rd as well. So between those two long trades and this one short trade, I should be able to capture both trades in this market. Does that make sense to everybody out there? Let me explain it to you. JPM is implied to have to buy a hedge. $12 billion coming into the market. $12 billion. So it either begins on Thursday or ultimately Friday. Does that make sense? As the hedges roll off, when do they roll off? They roll off on the 31st at the end of the day. Does that make sense? So you've got two large forces in the market. You will see. I'm gonna make you a bet. What will I bet you? What can I do to prove to you that you'll see a swing higher and a swing lower? I want to cut my hair off or something to show you the chances of a swing high and a swing low. I don't know what to do. What can I do to prove to you guys how likely the chance of that is? Because that is where we're at right now. So you could take just one side. If you're a bear and you're like, well, I only like this downside over here. We've talked about putting on a put spread, right? I like the idea of a put spread. JP Morgan likes the idea of a put spread. That's more than likely what they're doing, is they're putting on a put spread. They're more than likely going to take some calls above at 500, 525, 550. Some other banks will follow suit. But a Four Loco. Oh my. That is nasty. I don't want to cut off my beautiful hair. Okay, so what I'm going to do is how about this? If we don't swing high and swing low, I'll drink a Four Loco. I'll find one. I'll go down to the local shitty gas station and find some Four Loco. And I'll drink one. Because if it's even, I don't even know if they're available anymore, but I'll drink one of those because that sounds absolutely disgusting. And I'll do that if we don't have something like this happen. Now, if you don't agree with this theory as to what's going to happen in the market, I would recommend that you don't trade. Okay? Mark my words in this video, don't trade. Now, if you're trading individual tickers in this area here, there is some danger if your ticker's being hedged. You could see some volatility in your tickers, even if they wind up going up. I would expect less volatility in the bank favorite stocks. I'd expect less volatility in the AMDs, and the Amazons, and the Misfits, and the Googles. You might find some weakness, but not volatility. There is some real great chances. If you were to monitor, let's say, the beaten down tech trade, you would probably open up, I think in a lot of your brokerages, I think even in Webull, you can open up like 5 or 6 tickers. If you were to just monitor 5 or 6 beaten down tickers that you believe are going to come back in January, you would be looking for that moment of weakness where hedges are coming off, and then a bid into those stocks, and maybe you go your own way heading into the beginning of the year. Oh, Mad Dog 2020. That is so nasty. Shave my eyebrows. Oh, you know what I'll do? I'll shave a couple lines into my eyebrow like that really bad movie, Malibu's Most Wanted or something. That would look absolutely terrible. Or I'll cut some steps into the side of my head. I don't know if I can do that. But this is some form of a likely scenario. And if you see the bid come in, the reason you've got likely above and below is because if you start to see these banks put calls on that are outside the money, that will be the trigger for us to go higher, okay? And if you see the banks raise, or if you see the gamma fall, or if you see the hedging falling off and higher hedging being brought into the market, you'll see weakness in that hedging falling off down here, okay? So you've got a lot of mechanics in play right now in the markets. You've got all these cogs and wheels turning in the market right now. It's very complex. And my points behind the title card of this, it wasn't the title card. I meant to do like a bully title card. Is think of the market right now as like there's 4 or 5 bullies in the hallway at your school, or class is let out, and you're the new kid in school. You've got all these upperclassmen, and they're just walking by you, and you're getting rough-housed and pushed around as the big boys are making their moves. So you don't want to be rough-housed around. You want to understand and accept that this is what they're doing, and then you want to position yourself for each side of that trade. You can't trade the next 3 days and into Monday just like normal trading. You have to look at this from the perspective of the banks and say, okay, if I'm going to take a short here, I'm looking for us to actually get up to 48.80 or break below 4,700 if I'm going to be bearish. If I'm a day trader, I'm going to be buying the dips and selling the rips, right? You know where the dips are. I'm going to show them to you right now on the other charts. And you know where the sell the rip is up here, unless you start to hear chatter on social media saying, hey, this is coming in. Hey, these hedges are done. Hey, we just had so if you have 11, 12 billion dollars, 15 billion dollars on a buy side, 20 billion dollars on a buy side, you guys think we're going down on a $20 billion buy side in the morning of Thursday or Friday? You guys think we're going down that day on the buy side? $20 billion. Not happening. Okay? You might see weakness in futures, dealers selling futures, but you're not going to see it in cash market. So I want you to be conscious of these moves as we move forward. And if you're like, hey, this is too much for me, I need a break. When we had all this time to make money over here, there's no need to have to make money in these next 2-3 days. So if you want to trade the ER season, you guys know that when we go into ER season, there's always that one moment of weakness, sometimes even two. If you know that if tickers go straight vertical into ER season, that they always are sell the news prior to ER. And I know there's Tesla bulls out there that say, well, the last 5 years, we've always gone up at least 3 of the last 5 years or 4 of the last 5 years. I don't want to miss that. You don't have to miss it. What you can do is you just buy a call spread on Tesla with your price target for ER, right? You don't have to worry about any violent moves down in here. And you can actually hedge the market as well, okay? Gap up isn't likely. There is most definitely between now and the 31st a melt up day to 480. There is a high chance of it. An absolute high chance of a move up. Because there's no one out there that knows what the hedging is going to compose. Everyone thinks right now that the banks are going to be selling calls, and in reality we think they're going to be buying. 470.42. Sit, wait for the drop, and go in to go up. Okay. Yeah, so you guys can make your decisions as to what you think's going to happen. For myself, right, for my trading plan, I believe that we go higher, that we are going up to 48.25 between now and Friday. I have my calls in place for that move between now and Friday, that absurd melt up into the Friday close, and then I've got a hedge for expiring on Monday for some form of a sell-off into the 3rd. Both sides should print no problem for me. I don't think I have much of an issue in both of these trades here. But most of you out there, if you're getting chewed up in here, there's no shame in just waiting for the trade to come to you. There's no shit. We just made this giant move up here. 5 straight days of relentless up. If you didn't make your money in this trade here, then I don't know what else to say to you. And if you are uber bullish up here and think we're going higher than 48.25, which I don't think that we are. I think we're going up to like 4,800 on SPY and 48.25 on ES. But I think if we're going up here, or if we melt up here into Friday, there still should be some form of a relief rally down below. I want you to know that to 4,700, right here at 4,700, is still all bullish context. You start to enter volatility between 4,700 and 4,600, and we're not even bearish until we break below 4,600. Okay? All right. So let's go through the charts real quick for tomorrow. I just want to show you some levels. And we're just going to take a quick look. You can apply these to your trading day. I want you guys to see these as you trade. These levels move intraday. They should move, though they should greatly expand and contract over the next week due to negative gamma falling off the market from way back here. Show you where I'm talking about here. Right here. Okay? Somewhere in here. Right in here. We had negative gamma come into the market. We had further negative gamma come into the market down here. And we also had negative gamma come in for protection much lower below down here. That stuff is rolling off as we move into the 31st. It's one of the largest gamma expirations we've had in the history of the stock market. There could be some weakness associated with that into the 3rd. Okay, I want you to be conscious of that. And then we also have to be concerned about where the banks are hedging. If they're buying or selling their hedge, the implication right now is that they're going to be buying this hedge and not selling it. If you want to know where your buy the dip levels are, they're down below here at 47.14, 46.990. These numbers are slightly different in cash markets. Myself, I'll be trading down below here, looking for these dip buys. I think I put these out here for you the other day, right? You've got dip buys down below at 47.37, 47.56, 47.67, 47.80, and then we're looking to meet resistance above at 47.89, ultimately 4,800 and 48.25. Okay, so if you're like, hey, I'm losing money here, then you know where the sell the rip and the buy the dip zones are on this chart. Okay, you know where the volatility trigger is. That's at 46.33. The negative gamma flip is down below between 4606 and 4588. I'm going to show you the RTY chart. I'm really interested in this one because we've got major gamma coming off here. You saw the rejection at this is all volatility up here, and this is all volatility down here, right? You saw the nice clean rejection today on IWM. You should be looking for some consolidation in this area. You'll be looking for something like this. Some form of consolidation in here with the hedging, let's say, falling off into the new year, and then a rocket ship up. This is the trade that I'm making. If we break through and we don't get that weakness, I'm actually gonna make this trade here. If it fails, I'm looking to buy the dip down here into the new year to take this much higher. That's my trading plan, because we are in a positive context right now on the Russell. Remember not to day trade the Russell until we break above 228. If you are not day trading the Russell, you should be trading on spreads or 1 to 3 month out calls or puts. If you're bearish on the Russell right now, you should still be trading on a 1 to 3 month out put or a 1 to 3 month out put spread of some sort. I would also recommend, if you're taking credit spreads, let's say on the SPY or ES, not ES, but the SPY, you would do much better with debit put spreads on the Russell, because the directional moves are much slower. It's a less liquid market than the SPY or ES. So be conscious of that as you trade ES. Next, we're going to look at the Qs. And this is the holidays. You guys can, some of these trades, you guys can set them and forget them. You don't have to actively be trading them all day long. If you put a spread on, you can just walk away and come back and check on it and feel good about it. Matter of fact, this whole week, I felt much more confident placing a trade and just walking away from it and watching to see what happens in that trade. Same thing on the Qs. We had it. Wait a minute here. I haven't changed these charts from Sunday night. These are all the same charts from Sunday night. We made this move up. We tagged. This was Sunday into Monday, right? Today was This was today, the 28th. We tagged above. We came below. We hit some form of support. What are we expecting in here? We're going to be expecting consolidation in here, and the banks to either say, hey, yeah, we're going up, or the banks to say, no, wait a minute. I think that I'm afraid you got someone that doesn't like Tom Lee that says, you know what, I actually think we're going down. So we're going to buy a whole bunch of put protection way down at 13,000 or something, and then you'll see the market do something like this and a shot down. Okay? You'll see that weakness, and then you'll see us actually trade higher over time, and then we'll encounter larger volatility closer to March of 2022. You'd actually see this sell down, and then you'd see us trade higher into January, February, and then you'd see a March sell down to come back for those negative hedges. Gamma coming off can mean small moments of down, and then you have to add into what is coming on into the market. So let's say we have a negative gamma hedge that's rolling off, and we have a moment of weakness. We're also going to have an inverse moment of strength, and then you have to consider what what these banks are buying or selling into their next hedge. And right now, the thought process is that they're buying. So that's my point behind it. You should be expecting a move higher and a move lower. The last day of year. You do have that implication as well, Denny. You do have tax loss harvesting, which is a negative on the market. That is a good point, and I didn't bring it up this video. But you have a large negative gamma roll-off coming off. You've got smarter guys than me out there that are saying that you should expect some volatility. You should expect some weakness. You can't time these things. In previous OPEXs, you'll see that most of these banks, sometimes they really fuck up how they place these trades. They try to be sneaky in when they trade them so that it doesn't hurt the market. It doesn't impact so much. They try to break them up and make them quiet. They try to keep them quiet so they're not impacting the market. So you should expect volatility. You should expect, though, a move higher as well. You should plan your trades around these things taking place regardless. When you guys hear about in the past, when you hear things like the Santa rally, they're telling you that we will grind up. When you have a trader telling you there's no way that we're going to 4,800 or 4,825, then that trader is telling you that historically we don't melt up. But that's false, because we do historically melt up in previous years 80% of the time. So for you to say, well, we're never going to see 4,800, it's possible we won't see it, but there is an 80% chance from where we are right now that we are going to see it. We will see a melt up to that number. And even in those great years, there's a 70-80% chance that you'll see a moment of weakness. Now, can we time it? No, because the banks will try to hide when they place these trades, but we can prepare for it. We can say, I'm going to buy the dips. I know that as time runs out, there's a higher chance of us melting up to 4,800. I know that if I see news out there that JPM has placed their trades, that GS has placed their trades, then we'll probably get some weakness in one of these overnights. Does that make sense? Yep. Yep, and you will have weakness from that tax loss harvesting trade. There will be some weakness. But let's say you've got the tax loss harvesting trade going on. Then you've got all this other stuff. You've got all this interest from retail and banks to place the ER trade, right? These are traders that are like, I don't care if we have a good ER or not. I just know that everybody's going to be trading Tesla. I just know that everybody's going to be coming in to buy Apple for the ER trade. I already know that, so I don't care where we are, because once that interest and sweet premium kicks in, I just want in, okay? So you've got all those dynamics in the market right now. These next 3 to 4 days, a lot of complicated stuff is going on in the market, and I try to simplify it. I think your best bet is to do the straddle. That you get some form of a straddle on the short term at least, where you're like, hey, I'm going to trade this up. My price target is bullish to 4,800 or 480 or 4,825. I'm going to buy a dip for that expires before the end of the year. Or I'm going to buy a call spread that expires on Friday. That's just in the money. If you know we're pinned right now and you buy slightly inside the money call, you have a fair chance of closing that thing out for some profit. You have a fair chance of closing something like that out. But I wouldn't close it out end of day on Friday, because I'm thinking that end of day on Friday we're going to start selling down into that Monday. But there's some strategies that you can take. You could take a long call structure into the end of January. Or you could just wait and be like, you know what, I'm going to wait for the weakness in the market, and I'll take a long then. You don't have to trade the next few days. You can miss this trade. You don't have to win every single trade. And sometimes it's better if you don't take on risk right now and wait for your next perfect opportunity. If you go back to my video series, from the beginning I've told you guys, if you had just placed 9 or 12 trades on the bull side and 9 or 12 trades on the bear side, you'd be a perfect trader every time. Yep. The velocity, 7% in 5 days is no joke. But we can go 10%. We have gone 9%. We've gone 11%, 12%. So it's possible. And let's say we go up this 11, 12% and we actually go down. You know, this next swing down, let me show you guys this on ES. This is a tail risk, right? I posted on my main Twitter or my main Twitter feed. I posted a video from from Nasdaq, right? That talked about tail risk. And there are tail risk traders out there, hedge traders that trade on the potential of us trading down, but let's say by March at 438, 429. These are people that want directed hedging from right now into end of March. So how do you directly hedge an event that can't happen? You buy way outside the money calls down or puts down here at, call it 425, expiring in March. That this event is now possible. Way, 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 way deeper. Hey, little big bear. So yeah, and this is on the table. If you're a real bear out there, I wouldn't blink if we came down and traded down to 40. I want you all to know I wouldn't blink. If this weekend, heading into this weekend, we find out that the real big banks think we're heading down here, it wouldn't shock me to see us trade down to 4250, 395. What do you buy hedges down here or do you buy hedges up here? Right? Do you buy your put spreads up here or do you buy your put spreads down here? You guys already know that the Fed, I mean, they haven't taken their foot off the gas, but you know they're going to take their foot off the gas. You know they are. What if the Fed comes back New Year and says, you had your holiday rally, you guys can all piss off. Now we accelerated the tapering, and by the way, we're putting 4 rate hikes in January in 2022. If they said that to you in January, we'd sell down to 4 because we didn't expect all that, right? Hey, Andy. So don't say that it can't happen. Don't say, don't be absolutes in your viewpoints. When we are at resistance, it's time for you to put hedging on. I like the trade of us melting up into the end of the year here. And then I like some volatility for the ER trade in the beginning of January over here. I'm going to give that trade right now the best possible. This is the most likely trade. Okay? So plan accordingly as we move forward. If you guys are getting ground to bits, or if today you were ground to bits, just take a breather. Say, you know what I'm going to do? I'm going to sit back. It's easier to look at it on the SPY. You just sit back, take it easy, drink an eggnog with some rum in it. You sell the rips above, you buy the dips below until a decision is made by the banks to what their hedges are and the gamma rolls off on the 31st. Okay? Does that make sense, everybody out there? I talked to you guys about earlier in the broadcast, I talked to you guys about setting up a Discord for trades. Pay attention to the flow that we're posting. I think I'm going to stay. What I'll do is I'll do a live stream tomorrow, but I'm not going to talk on it. I'm going to focus more on where the action is in the markets if they're on single tickers. What I'll do is I'll try to track where the money flow is tomorrow, and I will switch the live feed, the live stream to those tickers specifically, so we can see if we can make some money on individual tickers. Maybe we'll start the day on ES. I know some of you guys are long ES. You can bring this down to a 5-day here, right? You had the buy the dip situation down below today. You had the sell the rip here. Bulls are going to be looking to sell the rip above here. We're going to want buy the dippers down here and down here. This is your risk profile. How much risk do I want to put on? I want to put on all the risk. I don't want to put on much risk. I'm going to wait and be patient for down here, right? Yep, bullish bias, 1 foot out the door. You know that if you're a bull up here, you can probably take a bull, or excuse me, a bear put spread for end of March, March 18th in the money, it'll probably print. You'll probably get a print off that. It's probably a guaranteed 100% print. If you want to be more conservative in placing that bet, believe in me telling you we're more than likely going to touch 4,800. When we get up here at 4,800, that's when you buy your put spread that expires in March. Okay? Yeah, let's talk about the Tesla trade. We'll bring up Tesla. You guys want to see Tesla? You guys want to see my viewpoint on Tesla? So this is the consolidation game, right? We're going to talk about the consolidation game on Tesla. Whoop. You guys want to know what the bears are doing? Let's see what the bears are doing. The bears are actually bulls. They're not bears. So right here, these are trap bulls, trapped bulls, trapped bulls, trapped bulls. Hard resistance we broke through, right? So I'd expect we always talk about this, right? You guys see me chart stuff out. What are you looking for? You're looking for consolidation, right? And either a break below or a break above, right? Consolidation as we head into ER, right? Break above, right? Consolidation, possibly a moment of weakness, and then I move higher, right? Now, let's say you have market conditions in here. This is what I'm looking for heading into ER. I could care less what ER is, but this is what my interpretation of what's going to happen. But then I have to consider, well, what about market conditions? Well, let's say we've got this hedge coming off, and you've got let's say you've got the market weakness, right? So what's the trade in here? You buy the bottoms, you're selling the rips, and then as we get closer to the 31st, I'm going to have a plan to look for some momentary weakness. And if I can grab this dip down here, I'll ride this last dip with month out, 3 month out calls on Tesla. Do I miss this rip on the 31st or 1st? Possibly. I have to take my own risk. If I miss this Tesla trade, there's probably 5 or 10 other tickers I can find where I will find this trade, right? I can move from Tesla to another ticker. Probably not going to look exactly like this, but you will probably see some form of rejection down below. You see all that? And you have to wear out these sellers. All these people want to sell above here. Does that make sense? Yeah, I really don't care about news. I normally trade this market. My interpretation of news is when I'm looking for resistance. Let's say I want to talk to you guys about news right now. So here's a prime example, okay? If I see Tesla, let's say I'm focusing on Tesla news, right? Let's say we break above. We're going up here, right? And I hear a Tesla news piece. If it's a negative news piece, I'm going to expect resistance. If it's a positive news piece, I'm going to expect we break through. Does that make sense? Do I think that the news created that resistance or support or created that bounce or not? No, not for a moment. I can already see the sellers and buyers before that news piece hits the airwaves. Okay? And the only thing that market doesn't like is unknown news. That's why so the market doesn't care about news. It uses it to its advantage if it wants it to be negative or positive. And that's why when you hear people say or you hear people say the market hates news, even if it's positive, it's because that stuff's not already priced into the market. The banks control both sides of the trade. I don't know if all of you guys know that, but they do. Okay. So Chaz, let's look at your, Chaz, let's have a talk about Chaz, okay? And 480 price target. Chaz has a big question he wants answered. We're going to answer for Chaz right now. Chaz, do you see the price target up here, 480? That's 47.98. We hit it in the after hours, right? Well, we're talking about SPY here. You want to talk about, right? 480 on the SPY. Let's talk about the SPY. Let's talk about the SPY. So I can get this closer for you guys. So you've got volatility here at 480, right? We hit 478.81, right? Let me ask you a question looking at this chart. I want to ask a serious question out there. Okay? Was 480 rejected today? Was 480 rejected today? Was 480.25 rejected today? Because I'm going to show you a rejection here, okay? Was 47.98 back here rejected? Was 47.052 over here, was that rejected? Was this rejected? No, right? You had consolidation. We eventually broke through. But was this rejected? Yes. Do you see what a rejection looks like? Do you see what rejections look like? Do you see over here what rejection looks like? Do you see right here what rejection looks like? Do you see the context difference in a bearish environment? Right? You go up slightly, then reject. Slightly reject. Do you see the bullish context? Rejection, new all-time highs. Rejection, new all-time highs. Do you see the difference in a bullish context and a bearish context? Do you see when something actually rejects what takes place? You pin, you hit the pin, and you literally sell down. Right? A failure to make new highs on the next attempt. Do you guys see, though, the difference between a rejection and a consolidation to new all-time highs? So if we rejected here, you would have seen this sell down. It would have been immediate. But when we're not doing that, you're seeing what's considered another attempt at all-time highs. Okay? Do you see this? So when I say to you today, my price target's 4,800, why am I telling you that? So let's look back over here. Does anything about this still say that this is bearish? Is there anything in the context of today, does this look bearish to you? Because I'll tell you what bearish looks like. Bearish would look like what we've experienced in the past. And that would be that we made our way up here and we immediately started selling down. Does that make sense? So we're either looking for news, and what news are we looking for right now? It's only the hedges that are being put on, or something unknown, if you had some major tragedy that took place. Because otherwise, this is a consolidation for a move higher. Be aware of that. Or a consolidation for some ugly news coming from the banks heading into the first. Good. I want you guys to be aware of this stuff when you're seeing us hit resistance. This is important at support. You guys want to know why down here, I think it was this one right here, this trade on the 17th. I'm like, well, we bounced here. This is starting to look bullish. And they couldn't actually dump it unless we were in after hours. I can tell you right now, if they tried this shit right here, if this, whatever bank did this, tried this shit in cash market, there's no fucking way that was happening. The only way this happened was in the illiquid markets. Okay? And you can see that time and again. You'll see in the after hours, or not after hours, in the overnights, the Globexes, you'll see the PJ traders push a stock up for you. You'll see them push a stock down for where you want it. This is where the after hour, not after hours, but the Globex markets is where the banks are the hand of God. They'll push the price down and kind of fuck you, and they'll push the price up and kind of fuck you. That was my concern up here, was that we would do that here. This is why I put the hedge on here, because I'm like, oh, you know what? There's a real fear of up here that they could just swoop in, slap the market down to 4,600 in the overnight, and there'd be nothing any of you could do. Nothing. Yeah, it's very helpful. It's very important for context. It's also important to know that we're in positive gamma. We're not in negative gamma. Whenever we sell down right now in positive gamma, we should be swinging higher. If we're in negative gamma, I wouldn't expect this move. If we're in negative gamma, I'm going to expect something more like this. So if I'm playing this swing, at no time in the swing am I thinking, oh yeah, this is going to go way higher, way higher. I'm thinking I'm going to buy this swing and sell out on this hard resistance until we show some bottoming down here. So even when I'm buying these things, because I long these all the time, I know to sell them at some point. And as a bear, if you're taking bearish positions on this side, you know that you have to sell out of your bearish positions at support levels right now because we're bullish. So the same thing works. And if you see more rejection here, if you see 1 tap, 2 taps, 3 taps, 4 taps, the bulls only get so many chances to go higher. And as time passes, I will get more bearish. So right now, I'm looking for news, or I'm looking for 3 or 4 attempts at 48.25, and I'll switch on a dime and become ultra bear. Okay? All right, so that's all I've got for you guys. Yeah, the bias right now is not down. The bias right now is we're bullish, we're retesting, we're attempting to make all-time highs once again. We'll take at least 3, 4, 5 we'll take at least 3 stabs at that. And if on the 3rd time we reject, we'll head down and test some lower levels. And then we've got all the other crap going on in the background with the banks, with the hedging, and all that other stuff that's going to... And it's funny, too, because when that stuff comes into play, you'll be hearing on social media those events being attributed to a rejection. You'll hear those events being attributed to weakness in the market, or the bulls have been exhausted. You'll hear all this stuff when in reality it's just functions that are going on in the back of the market. I bet if you see weakness up between January 31st and January 1st or January 3rd, you'll end up seeing some bullshit news associated with it. Oh, Decepticon virus is the reason. Or, oh, the inflation concerns are back on the menu. It's all bullshit. It's all lies. There are mechanics taking place in the market right now, and that's the real truth. That's what's happening in the background. Okay? So keep that in mind. And then the last thing I'll tell you guys to keep in mind is remember that we have a short week. Remember that on Friday we have a short day. Remember that we have banks closed around the world. Remember that we've got bond markets closed. Remember that we've got a 3-day weekend, I think, right? Is it 3 days, guys? Is it? So we got, you'll have some, 31st is a half day. 1st, 2nd, So you've got 4 days almost of theta burn. So be conscious of that as well. And then one other thing to remember, if you're a bull, is we've been trading in a bear. We've been trading on low volume. So if we have volume kick back in on the 3rd, it could amplify positions for both bulls and bears. We've got the diamond top, diamond reversal, huh? That's what we're doing, the diamond top, diamond reversal. You guys are hilarious. Right on, Omar. Yeah, I don't. We're in a bullish context right now. I'd like to see, and I'm gunning for this 4820 somewhere up in here. Could be 4800, 40. Well, the cash market and the ES charts are different. It'd be like, I'd probably be looking for a cash market 480, and I'd be looking in ES 4825, 4850 for a tag up below, some kind of a grind, some face melter. And then I'd be looking for a sell down into the new year for an ER run. That's my trading plan. You guys have to do your own trading plan. You guys have to do your own due diligence. Ultimately, you're responsible for your own trades. Remember that you have to put the big boy pants on. It's ultimately your money. It's not my money. You know, it's your bank account. If there's too much risk, or if this market's too complicated for you at this moment, remember, I always tell you guys out there, you can always hit the easy button. And you trade these moves down, you trade these bit larger moves up. You know, when you sit back, you smoke a cigar, you drink a cup of coffee or a cup of tea, and you look back at these larger moves, right? It's easy for you to just say, you know what I'm going to do? I'm going to wait until we start coming down over here, and then I'm going to throw a trade on. Do you have to capture this entire move? No. Do you have to capture this entire move? No. You just have to capture parts of it, okay? Right now, we don't know where we're going here. And this is the grind area. This is where we eat up bulls, eat up bears, until we make our next move. So look at it on a larger context. Look at it at a 1 year. I guess this chart kind of sucks to be looking at right now, but just take a breather, sit back. There are larger moves that are easier to trade, and it might not be for you right now. But for the rest of you out there, I've got some longs, I've got some shorts. We'll see how they work out as we move forward. Okay? New Year's Eve rule, 7.20. 4-8 bourbon, wife's boy 0. It's the Quinn. Yeah, the diamond top is the Quinn. All right, it's good to see all of you. You guys all have a great night. Yeah, I'm gonna probably have to talk to a few. If any of you traders are listening in right now that are interested in participating actively, and if you don't have a lot of market experience but want to moderate maybe the general discussion thread and keep it positive, we'd need some help with that. And then if any of you guys are active traders in the Globex markets or in the cash market, and if any of you are great at investing, I know Quinn is, I know Tesla Wolf is. I don't know if they watch this program, but I know that some of you out there are very profitable and successful and actively like to invest. And if any of you are interested in getting started in something like that, give me a DM on the Captain's Alpha handle, and we'll try to start a Discord. Okay? Have a wonderful night, everybody. Don't forget to like, subscribe if you can. If you're broke and just a new trader, it helps me to develop the videos that we're going to start rolling out. We're going to roll out a trading class. It's free. No paywalls. If any of you are making money or not losing your shirts, or if you're just learning any tools from us that we're giving you that are helping, please donate if you can. We put the hero indicator up today. It was limp. It didn't work. I have to go back in tonight and try to get that hero indicator onto maybe all the Fangman plus T stocks and make sure that it's actually running. I think I have to put the key that my I think I have to put my my license key in, and I didn't want to do that live stream today because it would be public. So I will work on that for tomorrow to get the hero indicator going for you guys. I'll do a class on the hero indicator as well, just a basic idea. Before I sign off, I want to talk to you guys about the hero indicator. So let's talk about the hero indicator. We can actually do this right now. We're going to talk about the hero indicator. If the hero indicator is following the movements of the stock market, it does not work. Does that make sense? So if you guys see the hero indicator doing this move here, it doesn't work. But if you see the stock market going down or your favorite ticker going down, and you see a divergence, if you see a divergence between the price of a stock going down and the hero indicator going up, it infers that that stock is at the end of its consolidation and it's going to break higher. Okay? If you see the hero indicator, let's say you see the hero indicator following down here, right? And the hero indicator goes down, but the stock is going up, that's a false breakout. It'll eventually crash. Okay? So you're looking for a divergence from the hero indicator to the normal trading of the day. Yeah, it's going to be badass. This hero indicator, when it works, is insane. So you'll be able to identify before anyone else in the market. At times, you're going to be able to identify fake bottoms, fake tops. You'll be able to be ahead of everyone else in the market. That's how awesome this indicator is. It should pay for itself 4 or 5 times a month. It should print big, at least 4 or 5 times in the month. It's a really neat indicator. It'll diverge from wherever it'll be showing you some kind of a move. It'll be showing you something. Sometimes you'll even be like this. I'm not really doing this the best here. You'll see like, wait a minute. Excuse me. You'll see like actually the actual movement of the hero indicator would be like this. This is actually what the hero indicator would look like. If we were doing this live on SPY, you'd see it go like this, right? And you'd see it go down. And so everybody would be like, woohoo, we're riding this up, woohoo! And you'd already know before everybody else that we're gonna reject hard. Does that make sense? So you'd be like, okay, I'm riding this up. All of a sudden you have divergence with the hero indicator. The hero indicator is coming up. You'd see divergence. You already know where resistance is. And you'd say, oh shit, I have to go short here. And that's where the actual move would be. It's an indicator that is put out by Spot Gamma for Bookmap. I think it costs like $115 a month if you're a non-professional. It's used by professionals. It's used by retail. So I use Bookmap with a bunch of different feeds, and then I use a bunch of different paid-for indicators. I think that one costs me $1,200 a year, $1,300 a year. Okay, you guys have a great night. I look forward to trading with you tomorrow. If you guys want to know what I think about what's going to happen tomorrow before I hang up here? You guys want to know what my thoughts are for morning? More consolidation, selling the rips, day traders, boiler rooms, selling the rips above at 4,800 and then buying the dips down below. So you're going to be looking to be buying dips down below here at this 47. Let me show you in Webull, this will make it easier. Selling any rips above. Look for a movement and eventually a tap at 4,800, 480 on cash between now and Friday. we could possibly grind up into Friday. And then I'm looking for a sell down. Could be anytime Thursday morning. Price is more important to me than time. I'm looking for price action. And then I'm looking for a sell down and for the big banks to head into to swoop in and start to buy their positions. Hey Quinn, I've been talking about you for the last hour and a half. You're one of my. I look, if you any of you guys don't follow Quinn on regular Twitter, he's one of my biggest follows. I love that guy. He puts out some great content. Very smart person. Mayhem for Markets. I follow him. Joe Donut, Chaz. But if you guys follow, make sure you guys are following Quinn out there. He knows how to trade, knows how to invest. Good to see you, Quinn. All right. All of you have a wonderful evening. I look forward to trading with you tomorrow. You'll have a live stream, and I'll be focusing on individual tickers or even the ES as we move forward. Good night.